Assalamualaikum warahmatullahi wabarakatuh. We are from Group 5, consists of me, Yasmin Luxia, Olivia Kira Utami, and Nadia Al-Makatri. We want to talk about the accuracy of calculating the VAT payable and the payment flow. So this is the topic of this chapter. First is calculation of OTIT, the calculation without OTIT, the calculation with net income norms, and VAT payment deadline. So goes to the first topic is the calculation of VAT with input tax and output tax. So the first is we will talk about output tax. Output tax, the definition of output tax is already explained by the previous group. So I just want to repeat it just to make sure you remember it. So output tax is a tax levied by a taxable entrepreneur from this activity of selling or delivering value-added tax by taxable goods and or service to customer either in cash or a credit, calculated from the net selling price of 10%. The formulation to calculate output tax is rate multiplied by tax base. For example, Clearview sells a microwave oven for 800,000 BND before tax, subject to a 10% tax rate. So the output tax is rate multiplied by tax base, that is 10% multiplied by 800,000. So we got 80,000. Goes to input tax. Input tax itself is VAT paid by a taxable entrepreneur due to import or of taxable goods or acquisition of taxable goods or receipt of taxable services or utilization of intangible taxable goods from outside the customs area or utilization of taxable services from outside to custom area. So the formulation to calculate input tax is rates multiplied by tax base. The input tax rate is 10%. The basis for imposition of tax can be in the form of input value, purchase prices, or the replacement value or other values. So goes to the example of calculation of VAT with input tax and output tax. So in here we have Clearview operations in February. On 2nd February, sold two media company 30 sets of 40-inch LED televisions with unit price excluding 10% VAT 3,600,000 PND per piece. On February 14, sold the company 20 sharp electric cookers with the VAT exclusive unit price of VND 1,100,000 per piece. On 25 February, bought 20 pieces 40-inch LED TVs and 110 sharp electric cookers with VAT exclusive price as follows: 40-inch LED TV with VND 3,300,000 per unit and sharp rice cooker 900,000 VND per unit. Shipping cost for goods is about 250,000 VND excluding VAT, 10% paying in cash. So this is the solution. We need to calculate the output VAT amount first. So after we calculate the formulation, the formula to calculate output tax, we will get 20,700,000, and input tax that we will get is 16,500,000. So the payable VAT amount is the output tax minus input tax. So we got 4,175,000 million. Goes to the second topic is the calculation VAT without OTIT. So we call it direct method. Direct method directly applies to individuals and business households that do not implement or not fully implement the regime of accounting, invoices, and documents as prescribed by law, and the revenues a year less than 1 million PNG. For an organization and individuals doing business not in accordance with the investment law and activities of trading in gold, silver, and gems. So calculation without IT usually happen in activities of trading in gold, silver, and gems. So goes to the calculation. We call it payable VAT amount. The payable VAT amount formulation is added value of sold goods and services multiplied by tax rates applicable to goods and services. So we will discuss about added value on sold goods and services. Added value of goods or services have formulation payment price of sold goods or services minus payment price of purchased goods and services. So in this formulation, there are the payment price of sold goods or services is the actual selling price stated on the sale invoices and goods or of goods and services, including value added tax and charge and additional charges enjoyed by the seller. The payment price of purchased good or service is equal to the value of purchase of imported goods or services, inclusive of VAT used for production and business activities or sold goods and services subject to VAT respectively. So therefore, for establishment trading in goods or services with adequate invoice of sold goods or services according to the prescribed regulation of or eligible to correctly determine the sale turnover of goods or services like contracts in payment vouchers, but there are not enough invoices to buy input goods and services. Then we have amount of added value payable, that is turnover, multiplied by percentage of value added on revenue. So inside this formulation, there are percentage of value added on turnover is determined for each activity as follows: 1% distribution and supply of goods, construction services excluding raw material 5%, production, transportation services associated with goods, construction inclusive of material is 10%, is 3%, and other business activities is 2%. So we'll go to the problem. The example is the review company sold 200 t-shirts in January. Total sales revenue is 40 million BNB, and the price of material purchase from outside to produce 200 t-shirts is 25 million PNB, of which main material fabric is 15 million, other materials and services purchased from outside is 5 million PNB. Value added tax rate is 10%. The value added tax by direct method payable by clean view as follows. The added value of the sold products of is 40 million minus 25 million. So we got 15 million. So the payable VAT is 15 million multiplied by 10%. So we got 1 million VN. So the next topic will be explained by Nadia.
Okay, now I will continue this presentation. This is talk about calculation of VAT with net income norms. Here is the main point of the subtopic. First is definition of value added tax norm. The second point for taxable entrepreneur or PKP can using calculation guideline. The third legal basis of taxable entrepreneur with certain gross circulation. The fourth specific gross circulation VAT norm rate. And the last how to calculate specific gross circulation VAT. First, I will explain about definition of VAT norm. The VAT norm in this case is input tax is a percentage of the output tax. Taxable entrepreneur or PKP that can use the guideline for calculating input tax credit based on a certain gross turnover is taxable entrepreneur whose business circulation is one financial year does not exceed 1.8 billion rupiah. Next is time for taxable entrepreneur can using calculation guideline. Taxable entrepreneur that has a certain gross turnover and wants to use the guideline for calculating input tax credits must notify the head of the tax service office or KPP where the taxable entrepreneur is registered or confirmed, which is carried out no later than first, when the deadline for submitting the VAT period is the tax period when it is confirmed as a taxable entrepreneur. The second, when the submitting deadline for the annual notification letter of SPT VAT period for the first tax period in the financial year, the use of the input tax credit calculation guideline is used. Next is legal basis of taxable entrepreneur or PKP with certain gross circulation. The legal basis is Article 9, Paragraph 7, 7A, 7B of the VAT Law, Regulation of the Minister of Finance number 74/PMK 03/2010, concerning guidelines for calculation of input tax credits for entrepreneurs taxable person having business circulation does not exceed a certain amount. Next is specific gross circulation VAT norm rate. The current input tax rate based on the regulation of the Minister of Finance number 74/PMK 03/2010 are first 70% of the output tax for the delivery of taxable goods or BKP. The second 60% of the output tax for the delivery of taxable service or JKP. This regulation applies to both individual and corporate taxable entrepreneur. The last topic that I will explain in this slide is how to calculate specific gross circular VAT. For example, PT123 provides service in the amount of 1 million rupiah and is subject to VAT is 10%, which is 100,000 rupiah. The input tax rate for taxable service or DKP is 60% of the VAT rate. So 60% times 100,000 is 60,000 rupiah. To calculate the taxable that must be paid, then 100,000 rupiah as output tax minus 60,000 rupiah as input tax equals 40,000 rupiah. So the tax must be paid is 4% of the tax base or DTP for taxable service. For taxable entrepreneur who use guideline for calculating input tax credit according to this regulation of the Minister of Finance, the taxable entrepreneur cannot charge VAT on the acquisition of taxable goods or BKP or taxable service or JKP as the cost for calculating income tax. The next presenter is Khalid.
Hello everyone, my name is Valia Zakira Utami, and I'm going to continue the presentation of this week's material, VAT payment deadline. Let's take a look at the maturity date of VAT payments and tax reporting. Number 1, PPN or PPN and PPNBM or PKP. Payment is due before the VAT period is SPT is submitted, and the reporting deadline falls at the end of the following month. Number 2, VAT and PPNBM or treasurer. Payment is no later than the 7th of the following month, and the tax reporting deadline is the end of the following month. Number 3. PPN and PPNBM, non-treasurer collector. Payment no later than the 15th of the following month, and the reporting deadline is at the end of the following month. Number 4. VAT on self-billed activities. The tax payment deadline is the 15th of the following month. Meanwhile, the reporting deadline is the end of the following month. Number 5. VAT and PPNBM on imports collected by the Director General of Customs and Excise. Payment is made before the first day after being collected, and the reporting deadline is the last working day of the following week. And the last, number 6, VAT on the use of intangible BKP or JKP from outside the customs area. Payments are made no later than the 15th of the following month, and the tax reporting deadline is at the end of the following month. Based on the Minister of Finance Regulation or PMK number 242 PMK 03 2014 Article 9, in the event that the due date of tax payment or deposit as referred to in Article 2 coincides with a holiday, the tax payment or deposit can be made no later than the next working day. And holidays, as referred to in paragraph 1, are Saturdays, Sundays, national holidays, days off for holding the general election, or national collective leave. So that's all of our presentation. Thank you for watching.